All right, welcome to Talking Investing. I'm Tom, and as always, this is not financial advice. Today, I want to talk about Cleanspark, stock ticker CLSK. They are a Bitcoin mining company. They just put out their monthly operation report. More importantly, they just put out their year-end financial results, and this stock has been on an absolute tear. So I want to go through all of that. There was a massive amount of information in their annual financial reports and on their press conference. I had three big concerns that I took away from this. So I want to go through what those three concerns are. I also have four things I think that came out of here that I'm very bullish on. So I want to go through both sides of this. I also want to talk about how management addressed each of my three concerns on the conference call. So all kinds of stuff to go through. Let's dig into Cleanspark. About half the people watching have not yet subscribed to the channel. So if you enjoy this content and you want to help support the channel, the number one way you can do that is to hit the subscribe button. So we really appreciate it. While you're at it, you can also smash the like button and hit the notification bell so you never miss a video. I'm making this video before the market opens on Monday. Sunday night, there was a gigantic run up in Bitcoin. So I'm not sure how that's going to affect the price of Cleanspark. But that notwithstanding, even as of the end of the day Friday, Cleanspark was trading at $7.64. You're going to see that was a 22.44% up day for Cleanspark. This brings them up over 100% in a very short period of time. We will take a look at their stock chart in a bit, but the stock is on a massive run. I do want to say on the day of earnings, this stock was down 5% on the day, and then in after hours, the stock was down 15%. So the knee-jerk reaction to this, for whatever reason, was a massive, massive sell-off. That was on Thursday night. By Friday morning, things were settling a little bit, but early on in the day, all of a sudden, all the Bitcoin mining stocks took off, including Cleanspark. Now, Cleanspark had already had a gigantic run up. Cleanspark is the number one performing Bitcoin stock over the course of the last 7 weeks. With all that said, I want to get into their investor presentation. I want to go through their financial statements. So with all that said, I want to quickly go through their November operational results, but more importantly, I want to move to their year-end financial results. We're going to go through their investor presentation as well. So let's get to it. Let's quickly take a look at what happened in November. Cleanspark releases November 2023 Bitcoin mining update. The company mined 666 Bitcoin in November, a 24% increase over the same period last year. I want to go through a few charts. Okay, quote from Zach Bradford, the CEO. We achieved our second highest monthly Bitcoin production despite increased difficulty and without using more energy. So November, there was major increase in the difficulty level, but they still mined more in November than they did in October. This was the second best month they've ever had. Our efficiency improved, dropping to 26.4 joules per terahash. We also saw a significant increase in production from fees, likely due to the growth in interest in ordinals. So all the Bitcoin miners, I think, are going to see those in their results in the month of November. Fees were way up. Then lastly, he says, significantly, our operational uptime this month reached an exceptional 99.98%, a direct result of our team's dedication and skill. So that is an incredible, just, 0.02% short of 100% uptime. One of the reasons that they're able to obtain this, they discussed on their earnings call, and it's twofold. Number one, they have a team on site that repairs these machines, so they don't have to send them away. There's not a lot of downtime when a machine goes down. Number two, they have extra machines on site. So as they de-rack a machine that's not working, they can rack a new one right away. So this really, you can see, results in almost no downtime at all. They expect to continue this type of performance going forward. So that's very impressive. All right, that's their monthly update. I want to leave it at that because bigger things going on here. Before I go through this in detail, I want to tell you the three things that I thought were concerning looking at their financial results. Later, we will go through and I'm going to specifically address each one of these and let you know management discussed all three of these in their conference call. So I'll let you know what management said, and I'll let you know what I think about it as well. Obviously, this is not financial advice, but I'm going to let you guys know what my concerns are. Number one, the cost per coin increased. This was their highest cost per coin in a quarter. So I expected the cost per coin to go up. The difficulty level continues to increase on the network, but it actually went up more than I expected. It went up more than a lot of their competitors. We'll take a look at that specifically a little bit later. That's my number one concern. Number two, overhead increased significantly. Overhead was up somewhere around 50%. That number surprised me quite a bit. So management did address that as well. We'll talk more about that later, but it is a legitimate concern. And number 3, continued stock dilution. Every single quarter for the last 5 quarters, CleanSpark has had a significant amount of stock dilution, somewhere in the range of 30 million shares. They did so again this quarter. So the stock dilution continues. Naturally, the number one comment that I'm getting by far, and the number one thing that I see people talking about online, is that retail investors are very concerned about this stock dilution. Is there any end to this? Is this just going to go on and on forever? And what are they doing with the dilution? One of the things that I think really disturbed investors on the conference call was they did say that they used dilution in this quarter to pay for operations in order to increase their hodl position. Now, we all knew they were increasing their hodl position. They went from 500 Bitcoin at the beginning of the quarter to over 2,000 Bitcoin at the end of the quarter. So honestly, common sense dictated. What would the other source be other than dilution in order to do that? I do think that surprised investors, but to their credit, they came out, they addressed it head on, and they said, yes, they did use stock to pay for operations in that 3 months to increase their Bitcoin hodl position. They talked about a strategy to continue to increase their hodl position. I'll get more into that later and tell you if this trend is going to continue. They specifically addressed the rest of this in the conference call. So those are my 3 big concerns. I think those were investors' 3 biggest concerns. Now I want to go through all the information, and then I'm going to tell you what management said about these. And also stay tuned, because I am going to tell you there were 4 things that I thought were very bullish. So I'm starting out with the things that I'm concerned about, but this is not a one-sided story. And you can see ultimately, as the market digested this stock has been skyrocketing. So I think despite these 3 things that are legitimate questions, I think management must have done a decent job addressing this, because the bull run continues, not only in Bitcoin, but specifically in CleanSpark stock. It is really outperforming the pack substantially. Okay, this is their investor presentation that they put out simultaneously with their earnings release. So I'm going to just go through a couple of slides. You're going to see transformational infrastructure. Right now they have 88,825 Bitcoin miners deployed. That's about 10 exahash. That's way up. They came into the year at 6 exahash. So they did grow their exahash substantially already, but you can see they plan to get from 10 exahash, they plan to double that and get to 20.4 exahash somewhere in the first half of 2024. Now, a lot of this, the vast majority of this, is already paid for. So one of the things that all this dilution went to was to get from 10 to 20 exahash. And remember, really from the beginning of the year, to get from what was 6 to 10, and now 10 to 20.4 exahash. This includes the recent purchase of 4.4 exahash of S21s. They already made a purchase of over 57,000 of the XPs throughout the year, so they have increased their fleet dramatically. All of those XPs are already delivered and on site. Some of them are still waiting to become operational due to infrastructure. Now I'm going to go to the column on the other side. Exceptionally strong balance sheet. These are their words. Now, I happen to agree with this. This is one of the things that I think I'm very bullish about with this company. $71 million in cash, that's as of November 30th, so that's not as of their September 30th financial statements. So they continued dilution. We'll go through that. And a lot of it was to create this massive amount of liquidity. So you see, in addition to the $71 million in cash, they have 2,575 Bitcoin as of November 30th. That's an additional 500 past what they had at September 30th. At the time, this equaled $97 million. If the price of Bitcoin holds, it's well over $40,000 here Sunday night. So this would be more like $103 million. So obviously that'll fluctuate, but plus or minus, that's another $100 million of liquidity. That's $170 million of liquidity that this company has. That is one of the key elements going into the halving and beyond. This company is set pretty much for whatever comes at it over the next year. So that is one of the things I'm very, very bullish on. For those of you who follow the channel, you'll know balance sheet is very important to me. Liquidity is very important. Cash is critical. This company is cash flow positive from operations. The revenue that they get from Bitcoin minus the direct cash costs, most of which is electricity, minus their cash overhead, is a positive number. So to me, that's the first thing that I look for with these companies, is they're generating cash and they don't have to dig in. This company does not have to do stock dilution to pay for operations. They can pay from it with the Bitcoin that they mine. In addition to that, they will have, in all likelihood, every single month, some Bitcoin left over to add to their hodl position. Okay, so against all of that liquidity, about $170 million in liquidity, you can see they have $14.8 million in debt, so next to no debt. Okay, next, right now, their current fleet at 10 exahash exahash is at 26.4 joules per terahash. So that's already a good number. That's much better than the overall network for Bitcoin globally. But you'll see when they get from 10 exahash to 16 exahash, that's going to reduce them down to 25.2 joules per terahash. And then when they get up to their 20.4 exahash, when their S21s are deployed, that's going to bring them down to 24.1 joules per terahash. So they will continue to reduce their cost. This will directly reduce their cost per coin. So this is obviously very important. So this will make their fleet extremely competitive. So this is a very strong fleet of miners. Okay, lastly, this was a slide in their investor presentation. So they talk about cost to mine at their own facilities, $12,473 per coin. And then cost to mine at hosted facilities was $15,797. So you can see that's a pretty big difference between the ones that they mine at their own locations and the one that are co-hosted where they have to pay hosting fees. So their point of this slide is more and more of their fleet is going to be self-hosted at their own facilities. So they're going to gravitate towards this lower cost per coin. Now, one thing I will say is when we do the math, you're going to see their cost per coin in the third quarter was higher than either one of these numbers. So they did address this, but they had a higher cost per coin than this. So that is a concern for me. I'd like to know what the gap is, and I want to keep my eye on this cost per coin. Now, with Bitcoin at higher and higher numbers, that's going to become less significant. But remember, with the halving, essentially the cost per coin is going to double. So I am still keeping my eye on this cost per coin. I do think it's a very important number. Okay, this is their balance sheet. We talked about strength of balance sheet, and since they've updated these numbers through November, there's not a lot of point at looking at the September 30th numbers. Only the one thing I'll say is even at this point, they had a positive current ratio, 102 million of current assets versus 74 million of current liabilities. And again, they have almost no long-term liabilities, so their total liabilities are 84 million. We know they now have 170 plus million dollars of just cash and Bitcoin. So the current assets have gone up significantly in the last 2 months. So again, one of the answers to what's all this dilution about, it's to strengthen their balance sheet. Now, Marathon did a similar thing, and everybody seemed to be pretty happy about that. I understand people's concern with the dilution, but one of the answers is this is one of the big things that they're doing with this. Okay, if we look at their income statement, you'll see their revenue was 168 million. That was up a bunch over the previous year. This is their annual report, so this is not quarterly. These are their numbers for the year. Their year end is September 30th. So these are the numbers for the year ended September 30th, 2023. So you can see loss from operations was $131 million. Initially, I think that had people freaked out in a big way, but it is worth mentioning that their depreciation and amortization was $120 million. And that included, I can't remember if it was $30 million or $40 million of a write-off because they took every single Bitcoin mining machine that is either retired right now or that they're going to retire at the halving based on the efficiency of those machines. They've taken a big write-off against those machines already as of the end of this year. So they kind of cleaned things up here at the end of the year. That's pretty common for companies to, clean up their books. 131 million of the loss from operations, 120 million of that is non-cash in depreciation and amortization. And then if you take their non-cash compensation, you'll see their EBITDA was actually positive. So this is what I'm saying. This is a cash flow positive company. Okay, now here's the big numbers, and these are a little shocking. A year ago at September 30th, 2022, this company had 55.6 million shares of stock outstanding. As of September 30th, 2023, 1 year later, they had 160 million shares outstanding. That's almost triple. But having said that, in that same period of time, once they get their 16 exahash online, which will be imminently in the next, month and a half or 2 months, they will have 4x the amount of exahash that they have, and they're about to go to 20 exahash, so, it'll even be closer maybe to a 5x. So those two things have to be weighed against each other. They did use dilution to grow, but their growth was monumental, and their growth has shown up in execution. They've gotten their machines up and running. They have mined more Bitcoin than all but Marathon in the year 2023. So this is a company that is operating at a high level, in my opinion. In addition to this 160 million that's outstanding at year end, if we go in the footnotes, we'll see under subsequent events at the market equity issuance from October 1st through December 1st, so the 2 months after these financial statements, they issued 24 million additional shares. So that puts them just under 185 million shares. The other thing worth noting is as of June 30th, when they put out their financial statements last quarter. So when this number came in at 160 million at the end of the year, this really should have been no surprise to anybody. They had already told us they were at 150 million when they issued their last financial statement. So I think it's important to understand most of this was already known to investors. These were the three things that I was concerned about. I'm going to tell you what management said in the conference call to address these three items. Okay, number one, cost per coin increase. So this was their highest cost per coin. I want to take a look at a couple of charts before I go through this just to help you put things in perspective. Okay, this is a chart of cost per coin by quarter. I take these numbers directly from the financial statements. So according to their financial statements, they paid $16,197 on the average per coin. This does not include depreciation. So you can see that's up quite a bit from last quarter, which was $12,700. That's about a 27% increase. That's more than their peers so far that have released their financial statements, and it's a little bit more than I expected. And you can see in the two previous quarters, they were at $11,800 and $13,335. So this is the highest cost per coin they've ever reported in a quarter. So that took me a little off guard. It's still by far not the highest cost per coin, but having said that, in the past, they were really lower than most of their competition, and I'd like to see them get back into that position. I want to see this cost go down. Management did specifically say that they mined aggressively in this quarter. So because they had a 42% gross profit margin, even at those prices, even when the cost of energy was high, they continued to mine through all of that because they were in an effort to maximize the number of Bitcoin that they mined. They did say that that was a stance they took in this quarter, but going forward, they did say they're not going to do that. They talked about the fact that they're going to be less aggressive if needed. They have the potential to underclock their machines as much as 50%. They did talk on the conference call about bringing this cost per coin back in line, especially dependent on the price of Bitcoin. So they talked about a lot of flexibility to manage that cost per coin. We went through the fact that their fleet is getting more and more efficient. By the time they get to 20.4 exahash, they're going to be at just over 24 joules per terahash. So that's very competitive. So that's one thing I'm going to be looking for. And it's going to take until next quarter until we get the answer to this. So all three of these questions, to me, until we see next quarter's financial results, I'm not really going to be comfortable as to what actually happened here. So I will be looking closely at next quarter's results to see if they bring this cost per coin in line and become more competitive and bring themselves back down to one of the lower cost per coins among their peers instead of a little bit more on the average is what they were this quarter. Okay, their overhead increased significantly. From quarter to quarter, it actually increased about 50%. So that is a gigantic increase. But remember, this is a company that went from 6 exahash. They're now at 10 exahash, and they're about to get to 16 exahash and then to 20 exahash. So one of the things they talked about on the conference call is that their overhead is going to stay flat in 2024. So they said they could double their exahash, which is what they intend to do, and they will need no additional increases in their overhead. So, when you consider it that way, this 50% ramp up in overhead looks like it's in line with not only the growth they had this year, they still intend to double their exahash over the next basically 6 months. So if they can do that, and if this overhead can stay flat, then I will be very satisfied. But again, I want to see next quarter's financial statements and see that that's what's actually happening here. So that's another key thing that I will be looking for in the next quarter. The third thing was this stock dilution. I think this is the biggest one by far. This really, really frustrates a lot of investors. And this one to me comes down to, do you trust management? We can see that management has done two things this year. Number one, all year long, they've drastically increased their exahash and grown their business. So we don't want to see a lot of stock dilution and no growth. That's a negative formula. But what's happened here is massive amount of growth, and that growth has paid off because they have been a top producer of Bitcoin all year long. They're going to finish the year in second place out of all the Bitcoin miners as far as the number of Bitcoin mined on the year. So this is flowing straight through to operations. The second thing that they did is massively increase their liquidity. So as a function of that, they have a lot of additional cash, but also they increased their HODL position significantly. So as a Bitcoin mining company, I think that's going to be more and more important as we move into what is hopefully the bull part of this cycle, which most of us think is still ahead. Typically that happens sometimes 6 months to a year after the halving. So if the price of Bitcoin is going to increase drastically, I think those Bitcoin miners that have a decent amount of Bitcoin on their balance sheet are going to be rewarded for that. So CleanSpark did a lot to increase. They've gone from 500 Bitcoin to 2,500 Bitcoin. I'll talk about what I think my target is for them as far as the number of Bitcoin that they're going to have on their balance sheet by the halving. On the conference call, they said they're not going to use stock dilution to pay for operations anymore. They did do this for a short period of time. They did this for 1 quarter. It's worth noting that for 2/3 of that quarter, their stock was at a very good number. This stock got up to over $7.50. It's actually all the way back up to that number. So a lot of this stock dilution was at decent numbers, but they did say no more stock dilution for operations. From this point in 2024, they are going to pay for their operations 100% from the Bitcoin that they mine. So whatever Bitcoin is left over, I think they will potentially continue to increase their hodl position. They did talk about the importance of hodling, and then obviously some of their Bitcoin they may use to continue to grow their business. So this was management's answers to my 3 issues. So for the moment, I will take them at face value, but I will say on all 3 of these things, I do want to see what happens next quarter. So this is one of those situations, the old expression, trust but verify. This has been, as everybody knows, a high conviction play for me. So again, this is not financial advice. I'm not telling you guys to buy this, but I will tell you, I listened to what management said. I believe that this is what's going to happen, but I am looking. I do want to wait. I would like to see this happen next quarter. This is a big position in my personal portfolio. Again, I'm not telling you to buy this or sell this. You guys got to do your own due diligence and make your own decisions. But for me, so far, I have held on to this stock even through this gigantic run up. So, I may personally decide to take some profits along the way with such a huge run up. But for the most part, my conviction remains in this company. Lastly, I just want to go through the things that I think are very bullish about this company. And it's the reason that, I plan on maintaining a position in CleanSpark throughout 2024. Number one, strong balance sheet. We talked about that. About $170 million in liquidity. And I think this is going to go up, not down. Number two, their Bitcoin production dominance. They were in second place almost every single month of the year in 2023 in Bitcoin production, only behind Marathon. So they will finish in second place this year as far as the number of Bitcoin produced. The month of December remains, but nobody's really in a position to catch them. So for the year, this was the second most productive Bitcoin miner that's publicly traded. Now, understand Core Scientific is in chapter 11, so I have not counted them in any of my statistics. They will be counting in the year 2024 because they have said they expect to come out of chapter 11 maybe before the year end, but imminently. But even with that said, it's my personal projection. Remember, this is my projection. This is not financial advice, and I can't tell you the future, but I believe that CleanSpark in the year 2024, I'm projecting that they will again finish in second place in number of Bitcoin mined for the year. I think they're going to mine more Bitcoin than Core Scientific, so we will have to wait and see. But in any regard, it's highly likely they'll either be second or third place for the year again next year, so they are one of the dominant Bitcoin mining companies. They have a massive amount of exahash coming online in the first half of 2024. The 57,500 XPs they talked about, the 22,000 S21s that they purchased. This is going to get them to 20.4 exahash in 2024. Lastly, their hodl position. They now have 2,575 Bitcoin on their balance sheet as of November 30th. I'm projecting that by the time the halving happens, and again, this is my personal projection, this is going to depend on a lot of management's decisions, but it looks to me like they are set up to get to about 4,000 Bitcoin on their balance sheet. That includes using their Bitcoin to pay for operations, which they said they were going to do from now on. But I think even the Bitcoin they'll have left over, I think they have a really solid chance of getting to 4,000 Bitcoin on their balance sheet. That will give them the 4th largest stack of Bitcoin out of any publicly traded Bitcoin miner. They actually already, even at 2,575, have the 4th largest stack of Bitcoin out of any Bitcoin miner. And I think that they're just going to continue to grow that stack. So those are the things that I'm bullish on. Those are the things that I liked from this conference call. Last but not least, I'm just going to quickly take a look at the chart. We alluded to this earlier. If we go just from November 10th through December 1st, CleanSpark is up 120% in that 3-week period. Now, you guys are probably watching this on Monday. Sunday night, Bitcoin's off to the races again. It's testing 41,000. So, this may be up from here. I don't know. But regardless of whatever price action we're getting on Monday, in a 3-week period, this stock's up over 120%. It's also, you'll see this purple line right here is where the stock was. This was their previous high for the year in 2023, and this was back in July. CleanSpark has now reached that high. They are the only Bitcoin mining company out of the 19 publicly traded Bitcoin mining companies that we follow on this channel that has reached a new high for the year 2023. And most of them are 30 or 40 or 50% away from that. So CleanSpark really, against their competitors, their stock has really outperformed the competition. Again, not financial advice. Please do your own due diligence. Also, you can see in a 3-week period, this stock moved 120%. These are extremely volatile stocks. You know, obviously there's a lot of room to the upside. There's a lot of room to the downside. For me, overall, I liked what I see. It seems like the market agreed with me because despite the after-hours knee-jerk reaction of a 15% move to the downside, this stock was off to the races on Friday. We'll have to see where it picks up on Monday and throughout the rest of the week. Okay, so that's everything I got for you on CleanSpark. Please remember to smash the like button and subscribe to the channel. Thanks so much for watching, and we will see you in the next video.